Hello traders, it's Samurai Trader here. Welcome to this training session, the Epic Traders Market Recap. In today's session I'm going to be covering a lot of information. We're going to be discussing time frames, the best time frames that I recommend for day trading and swing trading. We're going to be looking at some ideas that I have for you on trailing stops, how to hit that home run and maximize your returns on a trade, and a whole lot more. So as always, my recordings are raw, real, and unedited. I don't have a script that I run to except a few slides, and we are going to be going to the charts as well. So as you know, I always recommend that you take notes and just don't use a notepad. What you end up with, if you take notes, you end up with sheets of paper everywhere. You want a spiral binder, and that way you can catalog all of your notes over a period of time. As we get underway, also I do need to mention this and bring this up. Just that one idea may change your trading career, whether you agree with something I may say or disagree, or have no opinion at all. I want you to ask the right questions, because as we know, what we focus on and what we think about will change our life. Many of you may remember Earl Nightingale. Well, maybe the younger traders won't. Earl Nightingale was a famous radio announcer in the 50s in the US, and he actually released the very first motivational record. It was a record back then. We didn't have tapes, we didn't have CDs, and he called it The Strangest Secret. And what he did was, during his radio career, it was very much a talkback show as well, he interviewed hundreds of people over a period of time, and what he come up with was what he classified was the real secret to someone achieving success in whatever endeavor they were involved in, and he called it the strangest secret. And the strangest secret come down to one thing, and this is what he called his first record: we become what we think about. The strangest secret is we become what we think about. So remember, when it comes to really mastering the art of day trading, learning how to master the art of also day and swing trading, I should say, we need to be asking ourselves intelligent, empowering questions such as, what can I learn from this? How can I use this? What's great about this? And in fact, in episode 4 I'm going to be covering some trading ideas that I have from a gentleman called Trader Vic. Trader Vic released his book, I think it was back in 1991 now, and it's called Methods of a Wall Street Master. And I was actually reviewing his book only yesterday, preparing for session 4, episode 4, and I noticed at the back of the book he actually gets right into and discusses a lot of a great strategy. So when I he gets into from a positive point of view some of the techniques of neuro-linguistic programming and Tony Robbins. And I'd forgotten about this. I hadn't read the book for many years. So and Tony Robbins talks a lot about compelling questions, using intelligent questions, which is really important. Sorry traders, we just had a quick break then. My dog was going crazy. So back onto this. So Tony Robbins discusses, and in his books, a great deal about using and asking yourself compelling, empowering questions. So the questions I really want you to write this down. So, and if you approach really learning how to master the art of day trading with this approach, what can I learn from this? How can I use this? What's great about this? Remember, just that one idea may make a massive difference to your trading career. So as we get underway, understanding the risk for members, you've actually you see this on every one of my videos. If you're a new subscriber to my channel or watching my videos for the first time, please pause the video and read the disclaimer. If you haven't already subscribed, just a very quick advertisement: if you haven't already subscribed to my channel or obtained my free day trading book, you can download the link. It's in the description below on YouTube here. I also have a free training manual, and of course visit my website for $197. You receive all of my setups. There's literally hundreds of videos now. I think there's over 300 videos in my training program. There's just a ton of stuff in the program. And as we get underway there, I do need to bring up one more thing for existing members. This is aimed for brand new members, and even perhaps some of my and I have there's close to 2,000 members around the world now. So very quickly, I'm recording my Q&A sessions every week, and they're in the folder on my Google Drive under new recordings. So they're under new recordings. Now also for new members, do not forget there's literally hundreds of resources now on my Google Drive, so some members are getting lost. So if you go to this folder, Google Drive sorting, there's a little document there, a PDF which you can download, which will show you how to sort all of the resources on my Google Drive by date. But please remember that I put latest recordings in there, new recordings, and remember we've got there the strategy PowerPoint folder, the cheat sheet folder, and new member downloads. So for all the downloads for brand new members, yes, you can take it from the members area, but all of those resources are also in the new members downloads. Okay, so let's now get on with this. So I just want to briefly talk about the power of focus, and this comes up regularly and if not daily from my members. Where do we start as a trader? Well, what I want to talk about is really so many traders are attempting to trade too many setups. I teach now close to 15 setups, but as I say to all new members and to the general public, whether you have got the Day Traders Fast Track program or not, very important that you start with just a couple of setups and you master them. You want to own those setups before we move on. Now this is an email from one of my members. I call him Seattle Dave, and this is an email from last Friday where he said he scalped his way to plus 67, and this was on CL with 34 Bs and a few other bounces in concert with the 34. It's a strategy that we have, and it's a key strategy, and it works brilliantly on all markets and all time frames. And with that, it leads into something that I want to say and bring up, and that is something out of Mark Douglas's book, The Disciplined Trader. Now if you don't own Mark Douglas's book, The Disciplined Trader, it is probably the #1 book that every trader should have in their library. Now I want to quote out of page 209, and up there he says here, to become an expert, choose one simple system that identifies a pattern, preferably one that is mechanical instead of mathematical, so you'll be working with a visual representation of market behavior. Traders, as day and swing traders, we really are in the business of pattern recognition, and that's what we do. And with virtually every one of my setups, they're patterns. They're geometric patterns that appear in the markets each and every day. But if you're not consistently profitable as a trader, or if you're mastering or learning how to trade from day one, very important, just get a couple of patterns and go back over the charts, over hundreds of trades, and master those before you move on. And of course, as you hear me say in every recording, please put counter trend trading aside until you master how to trade with the trend. This is very important, traders, absolutely critical, because I'm still seeing traders become what I call overwhelmed. So the next thing I want to bring up is timing, and this comes from a new member just in the last week, and they said, I'm currently working full-time while I master the art of day trading and can only trade when I get home after 6 p.m. Eastern Standard Time. What markets would you recommend I consider trading? Well, this is really a common question, is just full stop on what markets do I recommend. Well, I don't like trading a range bound market. I like a trending market, as most successful traders do. So after 6 p.m. Eastern Standard, and you can use this rule for any market, because if we look at futures trading now, with most contracts they trade 23 hours a day. Forex is basically 24 hours a day, 5 days a week. So I love trading particularly the CME contracts or the futures contracts. So the euro, for an example, if we look at the euro, which is at $6.25 a tick or a point, we see fantastic volumes. And the euro is a CME contract that comes out, you're paying on average around $4 odd in commissions. On a daily basis, it's the #1 traded currency contract in the market. Then you've got the yen is another excellent one. You've then got third is the British pound, followed by fourth, which is the Australian dollar. So basically 24 hours a day, or 23 hours a day. It does close, the markets do close at the CME for an hour each day. The euro, the yen is fantastic, and then you've got gold, the yellow metal. Gold's another fantastic market. Yes, you might only see a couple of 100,000 contracts traded a day, but even during the Asian, the London leading into the New York session, you still got some great volume. Now if you trade with the trend, I know gold can be a real wild animal. If you trade with the trend, you're going to be kept on the right side of the ledger most of the time. Then of course you've got the Forex markets. Forex has got one advantage that I call an advantage, is you can get started with well under $4,000-5,000. You can start trading with a mini or a micro account as you build your skill level. Now during the London session, during the Asian session, CL, the black gold oil, can be quite slow, but once you get into London, which is 5 p.m. onwards Australian time, and very early Eastern Standard Time, CL picks up. And then you've got a market like the Euro Stock X50, which the ticker code on a trade station is FESX. Question mark, because the trading ranges can be a bit iffy at times. So there are some fantastic markets, the euro, the yen, gold, and Forex, that you can be trading. And so it doesn't matter where you are in the world. If you are working, just look at those markets. They're basically 24-hour-a-day markets with some great volumes. Now the next thing I wanted to cover here is being distracted, and as traders we can go through long periods and we can become bored. It's very easy as a day trader, particularly if you're waiting for the right setup to become bored. And so when we become distracted, you make mistakes. So there's a number of very important steps or rules that we need to confirm when we trade. That is, we need to make sure that we're refocusing. Now I tend to find that I can and in my office I've got a TV, so I'll watch a movie. I'll actually have a movie on at times. I find, for an example, I can easily have the TV going in the background, maybe with the news or whatever on. A lot easier to be doing that when I'm trading than reading. If I'm into a book, that tends to really defocus me. So having a TV. But anyway, every now and then I need to go back and check my checklist. Now we need to consider ourselves as pilots. That is, we need to for example, if you're a pilot, you're not allowed to talk about anything in the cockpit until you're above 10,000 feet. So once you get in the cockpit, once you start going through your flight plan, etc., and your checklist, you're not allowed to talk about, oh, how's your weekend? Oh, I went to a party Saturday night, until you're above, and once you take off above 10,000 feet. There's some strict rules why they want to keep you focused. So very important that as traders we refocus and learn to refocus, because otherwise this is where we make mistakes. So I'm just going to quickly go through a very brief trading plan with you, and this is not complete. Some things I've taken out because they're proprietary to the Day Traders Fast Track program, but I think you'll get the general drift. So first of all, and I know you may have already seen this, so I've got my trading rules and my checklist in plastic sleeve folders. On the right there I've got my trading journal where I take notes as I trade. I've got some of the patterns I might look at on the left there, but the middle one has got my trading rules. I'll highlight it, I'll put post notes on key points, etc. So consider yourself a pilot. Review, focus, review, focus. And so even if you're watching TV, just look back at your checklist regularly and go through it. So this is a sample one, very quickly. And at the top there, and of course this is not the PDF that or the Word document I'd use. I've just taken part of it and put on a slide here. But trade entry checklist, what is your target per day? Now you might have a little statement at the top. This one here is, I hold myself responsible for a higher standard than anyone expects from me. That's really important to me as a trader, because we really need to be following our rules 110%. But so whatever works for you. So very quickly, have I checked for red flags? That's red flags, red flag news announcement. what's really important for me is, have I plotted on my chart the previous day's high and low of the market that I'm trading? Have I turned alerts on? Now I've got alerts on some of my key setups that I'll turn on, but at other times I'll turn them off. If it's, say, a quiet trading time, I might have the alert on just to alert me when I do have a setup. On the other hand, in a busy time, I'll turn them off, because otherwise I'll be going off all the time and driving me crazy. Do I have a sweet spot? Members, you know what the sweet spot is. Has the candle closed in my trade direction? Now this is very important. As a day trader, I want to see a candle close in the top 1/3 or the lower 1/3 if I'm shorting, the top 1/3 of the candle if I'm going long. Does the ATR stop and flip confirm flip on the EC, which is the entry chart, confirm the trade? Does the ATR stop and flip on the anchor chart confirm the trade? Now that's if you're using an ATR. Do I have a trending 34 on both? Do I have a fanning and trending EMA? So there's a whole lot of things here, and then I get to my setups. Do I have a TradeMaster 2? Do I have a T1? Do I have a T2? So these are codes for some of my best setups. Do I have a T25 in a strong trending market? And I'm reminding myself I'm looking for a strong trending market. Do I have an 89B, etc.? So some of the other things I want to remind myself: I do not trade into major EMAs, which is usually a counter trend trade or a change in market direction, because with the major EMAs we usually get a bounce. Where are the pivots or other support resistance areas or levels? We want to know where the floor pivots are, because time and time again we get a bounce. Do I have a T7 counter trend trade? Does the long-term stochastic confirm? Trail my stop equals larger targets, which we're going to be looking at today in a moment. Do I have angulation, etc., etc., etc.? Now, as I mentioned, this is not complete, and just some ideas on some of the trading that I do that just you may find really useful. But it's very important that you, and I know you already know this, and by the way, just listening to the stuff I'm talking about, experienced traders, it's sometimes good to be reminded of some of the stuff we know we may have temporarily forgotten. So you may have you want to have a really comprehensive list and just be reviewing it. I know there's a lot of points here, but there's a lot of little steps in successful trading, so it's very important that you review them. Now moving on, I want to quickly talk about fib numbers and chart settings. Now I have hundreds of videos now on YouTube, and hundreds of videos that are exclusively for members only, and in a lot of my earlier videos you'll see I'll use non-fib numbers. Like on the NQ, I love the 133 tick. Now over the years I've got so many members now that more and more globally are into fib numbers, Fibonacci numbers. Now if I was to trade, for an example, a 133 tick chart compared to a 144 as a day trader, would it make any difference? I seriously doubt it. If I was to trade a 150 over a 144, or even a 200 over a 233, I don't believe it'll make much of a difference. However, it's, we can look at it this way: that almost becomes a self-fulfilling prophecy, because we've got so many traders now that believe or use fib numbers on their chart type. So basically on almost all of my charts except for the ES, where I'll use a 550 tick, I'll use a fib number. Whether you're using a range chart or whether you're using a tick or a volume, you can even consider it if you're using a time-based charts, but that's slightly different. So for day trading traders, if I'm trading the NQ during the New York session, I really like the 144 tick. On the black gold on CL, I like the 233. On ES during New York, I like the 550. You might round it up to a 610 on the ES. In quiet times you might drop down to a 233. But when it comes to time frames that you trade with, the time frame you use really comes down to what sort of trader are you, and how comfortable are you with the time frame that you're trading. For an example, I don't like trading really fast moving markets. I'll stand aside. It just doesn't work for me. All right, I like to perhaps take a few more seconds in thinking and placing my my trade, etc. So a 144 tick chart on the CL on the black gold is far too fast for me during New York. 233 is much better, and at times you almost need a 377. So find a time frame that suits you. You still got a lot of traders will trade time-based charts, and you might use a 1 minute for maybe your entries, with a 3 minute or even a 5 minute for your anchor chart, and maybe referring up to a 15 minute for a longer term view. So of course I don't want to neglect those that like their time-based charts, but a 3 to a 5 minute is probably the happy medium if you're using a time-based chart. So I just wanted to briefly cover that. Now for members in my program, you'll actually, just as a reminder, there's a PDF in the new member downloads on my preferred time frames, and there's a link to a recording specifically on that, but it comes down in the end to what you feel comfortable with. Now let's go to the charts, because I want to talk about, in the last 10 or 15 minutes here, I want to talk about how to catch a runner as a trader. That is, what are some of the things that you can be doing? Now my goal is to improve my targets. That is, I've been a scalper for so many years that I'm in and out, in and out, in and out. Is that necessarily the right thing to be doing? Well, not always, and not really, because in other words, I quite often leave some really good profits on the table because I got out of a move. That is, say on CL, if I just use that as an example, I might have targeted 5 to 8 ticks, but then it runs on for a 20 tick move. So what are some of the things that we can be doing to capture that on, say, the NQ, which we're looking at now? By the way, and you can't see it, it's cut off on the left there. This is the NQ 144 tick, and my anchor chart is a 377. Once again, a time frame of approximately 3 times higher, and both are fib numbers. Now what I have here is I've got my series of EMAs for my trend direction. I won't go into the stochastics and the MACDs and how we trade with those, but the key things I wanted to really look at, the blue line is what I call the trigger line. And as long as there are a couple of things we can do here, it's rather sensitive the way it's set. If I make it less sensitive, I'll keep more price action. So once I get into a move, and I might have what we call a T25 here, so I enter the move, enter the trade, and I can go for a fixed target, or if I want to trail my stop, I can trail by pulling up my trade. Once I hit an initial target, keep my stop two candles below, or trailing 2 candles behind. There's just a ton of ideas when it comes to trailing, but we can use the trigger line, and as long as we're above the trigger line, we stay in a trade. Now you can see here we would have been stopped out here and here if we get a close on or below the trigger line. Now you can make it less sensitive, which will mean for an example, with our brown line here, which is a 21, with the 21 you could use for an example, but you'll find it's perhaps a little too longer length. But there's one thing I wanted to quickly bring up, which is really important, which works beautifully, is an ATR. So the white dots here and the blue dots here is what we call an ATR stop and flip. So as long as I'm above the ATR, we stay in the trade. So here I had a entry here on a T20. This is also a 34B pivot bounce. It's also a T25. So we've got a couple, and traders, as you know, you can see you've got a number of T2s. So let's just say here, let's just take this one here. We've got a T2 trade right here. So here's our T2. So we would have stayed in this trade all the way up to here. Now if your goal is, as I had on the cheat sheet there, a minimum of $300 a day per contract you trade, if you go and achieve $105, and remember the NQ works on $5 ticks or increments, that's 21 ticks, and that's $105. 3 of those a day, you've hit your profit target for the day. We're not going to start going into profit targets right now, but just as an example here, I'm saying you've hit your target. So 3 of those moves a day or what I call home runs, you are there. Let's go and have a look at the yen. Now the yen is and for those that are unaware, the yen contract, you've of course got the cash market, the Forex market, or you've got the yen you can trade with the CME. Now the tick value with the CME is $6.25. so if you're if you target say 12 ticks at $75, or if you target 17 ticks, as you'll get on some of these moves, 17 ticks is, and I'm just using this as a hypothetical figure at the moment, but 17 ticks is $106.25. take away commissions and you've netted $100 plus. Because one of the intelligent questions to ask is, how can I improve my entries, how can I improve my targets and profitability each day? Now, by the way, on the questions that I'm asking, can you hear the presupposition I'm using here? How can I improve? I'm assuming I can improve. All right, so once again, it's a compelling open question rather than why do I always stuff this up, why do I always get out too early. That's disempowering. I'm using compelling questions here. But back onto this, we can see here I've got a great we call this a bet the farm trade, by the way. So I've got some nice divergence. I've got a T7. So for members watching this, here is a classic bet the farm. I better just say this for those that are watching this video, when we say bet the farm, you still maintain your risk reward, and very important that you obey your money management rules. But bet the farms are a very accurate, high probability trade, and they work brilliantly. And virtually every market we day trade will usually see between 2 and 6 of these a day on that market, just depending on which one you're trading. And just coincidentally, I just noticed that here there is a bet the farm. So we've got both a pivot bounce, we've got a T7, we've got our classic it's meeting all the conditions there of a bet the farm. Look at our anchor chart. We've got beautiful fanning of the EMAs on both time frames. It's a bet the farm. So using the ATR kept me in all the way down to here. Okay, now you can also use, if you don't have the ATR. Now the ATR stop and flip I only actually have for TradeStation for my members. So and by the way, if you use another platform, I'm happy to give you the settings that I use for the ATR stop and flip, or even the code. So if you contact me, I'm quite happy to share the code with you so you can program it yourself. That's for members, of course. Or you've got the trigger line. You can just adjust the trigger line where it's not so sensitive, and that will keep you in. But what it allows you to do is to capture some of these major moves. If we go and have a look at CL, so we're looking at the black gold here now with CL, it's $10 a tick, and as the yellow metal is gold, it's $10 a tick. You go and pick up some of these moves here, and you've just picked up $100, $120, $140 and per contract you trade. And how do you stay in? By using the trigger line. Now what you might do here is, say if you're trading 2 contracts or multiple contracts, you still might scalp, because we also know you're going to have periods like this where it's very choppy. All right, well, you still might scalp out on your first contract or your first number of contracts, your fixed target, but let your second targets run. And particularly when we look over here and we say, oh, by the way, here's just notice a trade here that I've taken. You can see it there. This is typical of me, where I've scalped the market, and that was for 5 ticks on 2 contracts there as I was trading. Now, but look at the move that I missed out on, and this is what I'm working on personally as a trader. And just on this point, this is where it comes back to developing habits. And you hear me on my recordings and in my videos talk a great deal about developing the right habits and using the simulator. So as an example, if you're a brand new trader using the simulator, you've got to use a simulator as if you're trading with real money. Likewise, if you start scalping and you've been doing it for years, and of course many traders like myself, that's all we do is scalp. But getting back to this thing, we leave on the table a lot of these major moves. And in my training room, I was only discussing this the last couple of days with some of my members, this is my major objective is to dramatically improve my bottom line, is to be after $500-600 a day per contract. How do I do that, or how do I make my trading life easier? Is have larger targets, and we can do that by understanding sweet spot trading and targeting. Now, we also know, traders, for the experienced traders, we know that in a very fast moving market, and we know that gold can do this, of course the currencies can do it, and CL can do it. It can move very quickly. And that's when you're trading down. What I recommend is, so say if your target is normally say 8 ticks, adjust it where if you do get a flyer or a market that takes off like a rocket, have it set to say 15 ticks. You can always drag it back, reduce your target, but set a higher target, because at times, as we know with some of these incredible moves you see, this will sometimes it's over within seconds. And even if we look at this move right here, traders, we look down at, oh, you can't see it actually on the recording here, but this particular move, this started at where is here, that started at 941.03, and it was over at 942.40. so it happened, well, there you had a little more time, but sometimes these moves are over within minutes. So you can always drag it back, your target. But I don't want to labor the point here, traders, but I just wanted to really encourage you to consider targeting on your second contract or higher some larger profit targets, because I'm sick of leaving so much profits so much on the table, and particularly when my personal objective is to increase my bottom line. So traders, that's the end of episode 3. We've covered a great deal of information. So as I close off, I just want to reinforce once again, traders, you've got to become a student of the market. No matter what if you go and watch other YouTube videos, or if you read someone's book on trading, if you go back and read an article, approach it with a winning attitude of, what can I learn from this? How can I use this? How can I improve my trade entries? How can I improve my exits? And in episode 4, we'll probably, and if I remember this, I'm going to just talk about some of the other questions that you should be asking, because I promise you, if you approach trading with this approach, it'll make a massive difference to how quickly you master the art of trading, your general attitude, because you've got to remember, traders, that trading truly is 90% head stuff. So traders, I hope you picked up a couple of ideas in this session. If you don't already have my ebooks, once again, subscribe to my channel, visit my site. Even better still, become a member of the Day Traders Fast Track program for $197. You get everything. There's no upsell, there's no coaching programs to buy. That is it. It's just, you know, as someone once said to me recently, it's a $10,000 program for $197. So I hope to see you as a member. Drop me an email. Look forward to having you as a member. And episode 4, I look forward to seeing you on that one. Thank you.